Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Um, One of the things that I find like people are always talking about when it comes to earnings is like how some stocks tend to have so much bigger of a move than you anticipate, right? And I mean, clearly, some of that is because the numbers were unexpected, right? You know, a huge surprise beat, big surprise miss, right? But a lot of times like those types of setups are created by the chart ahead of earnings, right? And I know for most of us, we're always focused on the stuff that's moving, right? We're looking for the things that are up a lot, things that are down a lot, things that are in play on a day-to-day basis, right? So when earnings on those stocks come up, we're like, oh, okay, the stock moves 10 points, stock is up parabolic into earnings. It's going to have to be a big mover, right? That's not always the case. Sometimes the best setups are the ones that actually aren't moving, right? Because you have these coiled patterns, you have these tight consolidations, and what happens is, so a name like Clack, right? It's been in a pretty tight consolidation for the past 2 months. Going into earnings, right? It was basically right in the middle of this range. You had a pretty well-defined resistance range of 325, support down around 305 ish, right? So a stock that's really not gone anywhere for 2 months, right? And you have a big catalyst, and if the catalyst is good, right? In this case, it was. You can get what I call a 2-for-1, right? So this is what I call a combo move. It's both a move in response to earnings, right? So like a positive earnings release, so you get a move on that. But then also what you get is a technical move, right? Because you get a pent up breakout out of a 2 month consolidation, right? So you get the response to earnings and you get the pent up technical move, which in this case ended up leading to like a really, really sharp pop, way more than what the options were anticipating, right? So when I'm screening for setups during earnings season, it's not always the ones that have been moving around the most that over the last month or 2 months that catch my eye. More often than not, those are the ones I'm avoiding. What I like to see is like these coiled patterns, tight trading ranges, consolidations, right? Because if I think it's a name that could move, right, then a coiled pattern is going to give me the opportunity to maybe catch like a much bigger move than what the option market is anticipating, right? Because if you do get those 2-for-1 type moves, those 2-for-1 type patterns, then that's really where you can like find options that far exceed what was expected by the option market, right? And that's how you get things that move 2x, 3x times what was priced in, not necessarily the ones that have been flying around over the past month. Okay, so just something to consider because I mean tonight and tomorrow actually you have some like high flyers that are reporting. So the temptation is to always focus on the ones that have been crazy up into earnings, but sometimes the best ones are the ones that have been really quiet ahead of earnings. Okay. So, if you like this video and you're looking for more information about trading earnings with options, please follow up with the link in the description of the video for more information on options to play. Have a great night, stay well, and I will talk to you all tomorrow.